Right now, India is standing at a major crossroads. It's facing a decision that could literally redefine the very idea of money for over a billion people. And at the center of it all, a new and pretty controversial type of digital currency. So let's get into it and break down exactly what's at stake here.
So this is the big question that's driving this entire debate. Should India open its doors to privately issued digital currencies? These things called stablecoins. And let me tell you, this is so much more than a tech issue. This is a massive national conversation with huge consequences for the entire economy.
And this whole thing just exploded onto the main stage at the super prestigious CII Summit. We're not talking about some small nerdy tech conference here. No. This was India's top economists, its top policymakers, all in one room, debating the fundamental future of the nation's financial system. The stakes are incredibly high.
Okay, so to really get what this debate is all about, we first have to understand the tech itself. So let's start with the exciting part, the promise of stablecoins, and figure out what all the buzz is about.
You've probably heard of cryptocurrencies like Bitcoin, right? Famous for their wild price swings. Well, stablecoins are the exact opposite. They are built for one thing and one thing only: stability. Their value is literally pegged, or you can think of it as anchored, to a real-world asset, like the US dollar or, in this case, the Indian rupee. So the goal is for one digital token to always be worth exactly 1 rupee. Simple as that.
So, why is everyone so excited about this? Well, the potential upsides are just massive. Just imagine sending money home from another country. Instead of taking days, it could take seconds. And instead of paying hefty fees, it could cost next to nothing. Stablecoins could also bring millions of people who don't have bank accounts into the formal financial system using just their smartphone. And for businesses, it could slash their transaction costs. The potential economic boost is just huge.
But, as you can probably guess, it's not quite that simple. On the other side of this whole debate, you have the Reserve Bank of India, the country's central bank, and they see their job as being the ultimate guardian of the nation's financial stability.
And yeah, the RBI has some pretty major concerns. They're worried that a flood of these private digital currencies could actually destabilize the entire economy. I mean, what happens to you, the consumer, if one of these stablecoin companies just collapses? But their biggest fear? A threat to what's called monetary sovereignty. That's a fancy way of saying they could lose control over the rupee and their ability to manage the country's economy. And that's a risk they take very, very seriously.
So what we're looking at here is a classic high-stakes balancing act. You've got the incredible promise of game-changing innovation on one side, and on the other, the absolute need for strict regulation and stability. It's a tough spot to be in.
This really lays out the two different paths India could take. One path leads to incredible efficiency, more financial inclusion, and a wave of innovation. But the other path, that one is loaded with risk. We're talking financial instability, a loss of economic control, and this really scary thing called systemic risk. That's the nightmare scenario where one failure could trigger a domino effect and bring down the entire financial system.
One senior economist really hit the nail on the head, calling it a fascinating paradox. On one hand, stablecoins can be unbelievably useful. But on the other, without really strong rules, they could threaten the country's whole monetary policy. So the real question becomes, how do you get all the good stuff without unleashing all the bad?
Now, I know you might be thinking, hold on a second, I'm pretty sure I heard that India is already working on its own digital currency. And you know what? You are absolutely right. But this is where we need to make a really, really important distinction.
The key difference, and it's all right here, comes down to one word: control. The e-rupee is what's called a central bank digital currency, or CBDC. That means it is official. It's issued and fully backed by the RBI itself. Private stablecoins, on the other hand, are created by private companies. So think of it like this. The e-rupee is the government's official digital cash, while stablecoins are more like a private alternative.
And all of this brings us to the final burning question. What does the road ahead actually look like? Where does India go from here, caught between these powerful forces of innovation and caution?
Well, the honest truth is, we don't know for sure yet. That big debate at the CI Summit proves the conversation is happening at the very highest levels. We know that policy frameworks are being hammered out behind the scenes. But right now, there is no clear timeline for when we'll see the final rules. The future is literally being written as we speak.
Which leaves us with this one final, critical question. When we're talking about the future of money, does India really have to choose between innovation and stability? Or is there a way forward, a path that allows for both? That, right there, is the billion-person question that policymakers are wrestling with at this very moment.